All right, you guys. So for today's session, we will be going over price action trading. We'll cover all of the materials that we have um, covered so far with our team as a review. And hopefully, if you're new here, that will encourage you to go check out the prior classes. So again, team, price action is the study of price movement in the market, and it's this simple price movement right here, these candlesticks. um Let me turn off my extended hours here. There we go. So it is the study of price movement, as we can see. Now I have my own customized script, which if you're part of Thinkorswim, I can send it to you, and you'll get the same setup that I have, the same scanner, the same watch list, and also the same indicators and color, everything. You don't have to do any of that. So if you do have Thinkorswim, let me know and I'll be more than happy to share. But yeah, this price movement right here, the candlesticks are the pure form of price action. And then anything you add from there are additional strategies where you can combine with your arsenal of price action strategies to make better trades. Now, why does that matter? Because today we were looking at price action for the S&P 500, and um, I uh, I basically I made a mistake here. So instead of taking that low probability trade, although I had a tight stop loss, I could have waited out for this trade and waited until tomorrow morning to get a smart money retest of that demand zone with the RSI testing 30%, which would have been a higher probability trade. So let's take a look at how that performs in other times where the RSI has hit 30%. Today's price action was definitely weird, but even if you traded today's price action here, from 529 to 530.11, that would have also been a good trade. But today was definitely not a good day to be taking bullish trades. And the reason why is because we had been so overbought from the 20 EMA line on the bigger time frames that it was getting very difficult for us to continue to advance higher without getting some sort of pullback. I mean, we have gone from here all the way from 500 on the S&P 500 all the way to 535 in just about 2 weeks, you guys. 531. That's a whole lot of move with no pullback in between. So that's why today's pullback was so highly likely. And going into Friday and possibly Monday, I'm expecting the markets, even if we do get some upside, I'm expecting supply to continue to overwhelm demand and print out these big supply bars. I have Thinkorswim. Please share. Yes, sir, I can. All right, there we go. Best loser wins. Okay, by Tom. Okay. Thank you for sharing that. All right. So, team, now that you know about combining price action with other indicators, now let's take a look at what is price action based trading. Price action based trading is the ability to trade with no indicators to cloud the view of the asset price you're trading. A price action based trader focuses on the behavior displayed within the price chart, trading based on the actions of price sentiment at the given time. So, candlesticks to traders contains the singular belief, knowledge, and action of all of the participants involved. Now, a great example of this kind of trader is Mad Hatter. Our new admin, Mad Hatter, is one of those traders that does not care much about the news and solely focuses on price action trading. what it takes to be the price action based trader. When prices are advancing higher, this is a clear implication buyers are in control at the given time. So when this is happening, this is when you want to trade with price action. So let's put that into example within the dynamics of supply and demand. So if this is a rally, again, this is indeed a rally. So we are in an uptrending market, right? This is a rally right here. So now we have some sort of digestion. If this is the digestion here, it's going to have a defined support and a defined resistance, because digestions are simply consolidations or cool off periods before the next leg higher. So when does the next leg higher begin? It begins the moment demand overwhelms supply at the level of resistance. So this is simply an implication that buyers are overwhelming supply and buyers are in control, and they're going to advance prices higher. So again, you will see why we look at price action this way, what our core strategy is shortly as we cover what supply and demand are. So again, we use 8 price action based trading methods. We use supply and demand and the formulas. We use candlesticks as pure trading signals. We identify any market trend structure. So whether we're in an uptrending market, we're in a downtrending market, whether we are simply going sideways and not having any trend. Um, we use support and resistance, which define the bottom and the tops of supply and demand and its formulas. We study trade executions to get and illustrate to successfully pinpoint right basically well executed trade entries, exit, and profit targets. We also emphasize on risk management tools, and we discuss all of the aspects of risk management and which the most important ones are. We will also be using moving average lines as our price action strategies. Moving average lines are this one, which I have two only. I have the 200 SMA line and the 20 EMA on one of my chart there. And for this chart, I have the 200 SMA and the 50 SMA. So the reason why I have the 50 simple moving average and the 200 simple moving average is because those two are known to trigger major algo buys and sells depending on how those lines are intertwining. So if we have the 50 SMA line getting above the 200 SMA line, this signifies that the short-term trend is beating the longer-term trend. So if the longer-term trend is down, and let's take a look at an example. So we can see the longer-term trend is down here with the 200 simple moving average, signifying that this market on AMD was in a downtrend from 2012, 2013, 2014, and 2015, as we can see from the weekly time frame here. So the weekly time frame pretty much signifies each candle representing 1 week from Monday to Friday. So each of these candles are from Monday to Friday, just 1 week of trading duration. So as we can see, once the 50 SMA line gets above the 200 SMA, this initiates what is known as a golden cross. And that itself is a major buy signal for major algo systems such as institutions, pensions, and so forth. Now, vice versa, if you do see the 50 SMA line getting below the 200 SMA line, that signifies a death cross. We can see that bulls held very well, and that signifies why we saw the upside that we saw. All right. So what does all of this mean, team? All of these are meant to show us the dynamics of supply and demand. So they're meant to make our core strategy on supply and demand easier. So what are our strategies on supply and demand? We will cover that as we move into supply and demand zones. So supply and demand zones. All right. So, what forces drive market prices? The stock market is a double auction market where the forces of supply and demand are in an endless clash for control. And the concept of supply and demand works in the same way in the stock market as it does in any other financial asset. Supply and demand is the primary factor that determines the price, but there are various factors that influence supply and demand traders must know. So, our expectation in this mentorship course is to teach you all about those tools. Again, what are supply and demand? Supply and demand are the driving forces behind the price movements. Supply is when the sellers exceed buyers, causing price action to drop, and demand is when the buyers exceed sellers, causing prices to drop. Uh, a demand a demand zone is a price area where there is strong buying interest, and in a demand zone, prices increase significantly due to excessive surge of buyers. We will take a look at what that is. So this simply right here is a demand zone. Why is that a demand zone? Because in an uptrending market, in an uptrending market, there is one distinct one distinct characteristic, and that is you get higher lows, higher highs. Sometimes the higher low comes in the form of consolidation where you don't even pull back. So, what ends up happening is you get a rally, you get a base formation where the price action consolidates, and then you get another rally. Now this particular formula only happens in uptrending markets. So these are the four types of supply and demand zones. The one that we are looking at is a rally based rally. This bullish characteristic only happens in uptrending markets. You'll never see that sort of move in a downtrending market. Maybe you will see it, but only to fulfill a bigger time frames lower high structure. All right, so let's go back. Let's go back. All right, team. So do you see what that means? Once you get that overwhelming momentum on above resistance, we are going to see a continuation where the trend resumes. And that's simply what this is telling us here. Um, Again, we are in an endless, we're in endless battle for control. And there are times where demand will continue to exceed sellers, and that causes the price to rise. So, understanding what kind of market we're in is very important. All right. So there are four cycles in the market. These four cycles are accumulation, advance, distribution, and then decline. These four cycles take place over and over and over in the markets. So now again, who are the market participants that you are trading with or participating with every day or every week or every month, depending on how often you trade? Traders at any time and any given moment of trading are divided into three groups. We have the buyers, the sellers, and then the undecided who are sitting on the sidelines with their cash. There is a permanent tug of war between buyers and sellers, and that is all reflected in the bid and ask spread of prices. Ask is what a seller asks for the stock to sell. Bid is what a buyer offers for that position. So, where prices go are determined by sentiments of the buyers, sellers, and the undecided traders. Now, when do the undecided traders come in? The undecided traders come in once they have a clear set of understanding on the direction of the market. So the presence of undecided traders puts pressure on buyers, which are the bulls, and sellers, which are the bears, as the undecided contribute to the final step of the move. The action of buyers and sellers cause prices to move up and down, and this exchange goes on forever, creating peaks and troughs through the trendline structures. Traders willing to sell at a lower ask cause prices to drop, while traders willing to buy at a higher bid lead to surging prices. So, again, it all comes down to the very essence of supply and demand. Sellers are selling at a lower ask, because they expect prices to fall, causing a surge of supply, which are a surge of sellers, and this basically snowballs. And the same thing happens on the buy side. So again, the universal laws of supply and demand, as we mentioned, all financial assets work on the universal laws of supply and demand that has been in works for as long as the human trade has existed. Um, Supply and demand represent the huge imbalance between buy orders and sell orders at specific price range, and the zones represent the movement of smart money who make up most of the market liquidity. So again, buyers and sellers, selling by bears pushes the market down, and this creates the term sellers are in control. And buying by bulls pushes the market up, and this tells traders buyers are in control. Supply and demand through candlestick charts reflect this fight in action. Price action reflects the mass psychology of all traders at any given moment. So you, as the trader, must think ahead, always outside of the box, distinguishing between those levels as the established zones signify smart money participation, as we covered in today's live trading session. So again, to think of price action and team, I do want to emphasize on this. You can apply this concept, you can apply your price action understanding to your long-term investment. So what do I mean by that? If let's say you're looking at the 11 sectors of the economy within the S&P 500, and you're looking to see which sectors are strong, and you already have an understanding of what the three possible sectors of rotation are going to be. So in this case, let's say XLK. If you understand the supply and demand dynamics within price action, this is going to greatly help you differentiate between what markets are going to be hot and what markets are not going to be hot and not in rotation. If we look at these two examples here between real estate and the real estate sector and the technology sector, we can see that the real estate sector was in a bear market for 2 years, while the technology sector ended its bear market in October 2022, and from there went from 115 all the way to 181. So that's one heck of a move compared to the real estate market. The real estate sector. So this is why it's very important to understand price action. And you can be a trader, you can be an investor that's looking at, let's say, AMD, and you understand price action, and you know that when price action is way too far away from the 200 SMA line, we won't be buying, because this is where institutions, this is where pensions, all of those market participants dump their shares, secure profits, and then buy back in much lower, far closer to the the 200 SMA line, known as the home base moving average. So this is very known among institutions, and that's why almost everybody you meet is using the 200 SMA line. So again, once you see that AMD is coming down, pretty much coming back down to oversold conditions, and now you have a smart money concept. You're seeing that the supply and demand dynamics are changing from where the market was in a downtrend. So where AMD was in a downtrend for about 3 months, to finally breaking the downtrend and now going back up in an uptrend. So we can anticipate AMD continuing to move higher from here towards the 200s. And this is because the forces of supply and demand have now shifted back to demand for the buyers. So again, you can use that understanding to make great informed decisions on your investment entries. So again, you're doing the research, and then you're applying the investment. You're applying your understanding, your research with your price action understanding, and you're going to formulate a nice entry or exit, depending on what you're doing. All right, so team, looking at price action here. how do I make that as simple as possible for you to understand? Now, let's say that you're forgetting everything that you know um, about charts. Now, here's what to look at. This is the price of AMD, right? Each chart that we go to, we can go to Walmart, and this chart will show up. Now, whatever chart you look at is trending one way or another. It could be sideways, it could be down, or it could be uptrending. So the market moves in four cycles. So if you can just remember these four cycles, that's it. You're getting a great understanding that um, you can grow from there and pretty much expand your knowledge. Now let's make that even easier for you. Okay, the market moves. The market moves in um, two phases. Okay, forget the cycles. All right, we'll come back to the four cycles, but the market itself moves in two phases. What are the two phases? One phase is a consolidation. So I'm going to go ahead and remove that big consolidation. I'll do this one and then I'll show you guys. So one phase is a consolidation, and then the other phase is a directional move. So the directional can be up or down. Okay, team. So again, to understand price action, to understand how to read a chart, you can think of it this way. Okay, the market moves in two phases. So those two phases to recognize. The first phase is the flat phase, which is the consolidation phase. And then the second phase is the directional phase. Now, the directional move can be up or down. Okay. So you got, again, is that simple enough, team? We got a consolidation and then we got a directional move. That's the first basis that you need to know about charts. And it's very easy. Now, let's think about let's further distinguish those two phases. Now, those two phases have four cycles in them. Now, these four cycles to recognize are the accumulation, the advance, the distribution, and then the decline. So let's take a look at what those four cycles are. Now, this is a chart. Let's see. So this is a chart. This is a chart. Where can we find a downtrend? Now, this is a downtrend on a stock. This is a downtrend on Walmart from 2014. Now, in 2014, Walmart was in a downtrend. We had gone below the 20 EMA line, and from there, we entered a prolonged period of a downtrend going from $26 all the way down to $18. And then what happens is we can see that this right here was the period of um, uh, distribution and then decline. So this was the period of distribution and then decline. Once we go from the period of distribution and then decline, we go into accumulation. So during the period of accumulation, price enters a sideways consolidation, and this happens after a range of a cycle of decline. So this accumulation is recognized by sustained base of consolidation, which means you're no longer seeing a lower low. Later on, we will find in a trend structure that prices move in lower highs, lower lows, lower highs, lower lows, and then lower highs again, lower lows, and then until that comes to an end. So eventually, once that comes to an end and price action goes from making a low and then a higher low, the trend structure changes from there, and now we go to higher high. So this higher high is higher than that prior high. That's why it's called a higher high. The high is prior than the prior high. So once you see that higher high, you should suspect a higher low, and then another higher high, another higher low, and then finally you see a breakout, and this basically goes on and on and on. So again, this phase here, this is the accumulation. Now, if I extend this accumulation, this zone here, we can also use it to catch future higher low structures that will rebound just at the resistance of that accumulation. So your accumulation is always going to have a resistance and a support, so a defined level. So in this case, we are connecting that data point right there and this data point, and then extending it, and this gives us this whole cluster of a breakout and so forth. And then we see those retests here, which all show very, very clear strength that price action is going from where supply was overwhelming demand to now demand overwhelming supply, because as soon as we come back down to the resistance, we just get dip bought, as we can see here from the strong forces of demand. So once we see that accumulation, team, what do we see after? Price action then enters advance. So the advance cycle is followed by price breakout from the resistance of the accumulation zone, which creates an uptrend, and price is now above the 200 moving average. So we can see that right over here, when we enter an uptrend, we can see that there is a narrowing, and this will happen during accumulation. We will see a narrowing of price around the revolvement of the 200 SMA line. So in this case, we can see price action is revolving around the 200 SMA line and narrowing until finally it gets above it, closes above it, and that initiates the expansion away from the 200 SMA line. So that puts us in imbalance, advanced cycle. So now that we're in advanced cycle, what happens after the advanced cycle? Now the advanced cycle can go on for some time, okay? It can go on. It can create another big consolidation. It can create a massive, massive consolidation. So I can do this, include these data points, and we will get another big rally. As we can see, we will get another rally, base rally. So this right here is pretty much another accumulation before we see another rally. And in the same way that I'm showing you, where the forces of supply and demand will continue to overwhelm. So in this case, if we are in an uptrending market, we will continue to see these rally-based rallies until we eventually hit a ceiling where we now make we make equal highs. And the same way that we bottomed out here, where we didn't make any lows during the accumulation, we would see the same thing on a distribution zone. So keep that in mind, okay, team? So again, we have been in an uptrend ever since, and you can see the same thing happening over and over and over, because we're in an uptrending market. So because we're in an uptrending market, you're not going to be wasting your time shorting the market, because our core strategies tell us when we're in an uptrending market, we look for the demand zones and we don't short the supply zones. Now, Sunny said, what time frame is this? This is happening on the daily chart. So this is happening on the daily chart for Walmart, the daily time frame. All right. So team, again, this can go on, like we said, this can go on over and over and over until eventually price action hits a resistance floor where it can no longer make a higher high. Now, what is this higher high, higher low, and lower high and lower low that I'm talking about? Let me find the slide so I can show you guys what that is, so you can get a good blueprint. So this is right here. This is a bullish to bearish trend change right here. So again, this is a bearish to bullish trend change. Once we start to make, you see, this was a higher high, and then this was an equal high. So once we start making equal highs, this means that we have topped out. And as soon as we start to break below the support level of that consolidation, this tells us that we are now entering a period of decline. So if we put that into example on the S&P 500 on the 5-minute time frame, I think we can conclude that today, I believe that we entered a period of decline because we had these supply bars happening. Now, it wasn't only the supply bars that was happening. What gave the notion that we are in a downtrending market is the fact that we were placing this structure here. Now, what is this structure that I'm referring to? It's this one right here. It's you see, first we see equal lows here, right? We see equal lows, no highs. So right here, this counts as an equal low because nothing is happening there. This is an equal low. So now, once we have an equal low, what happens is we break below. So this was supposed to be support, right? This was supposed to be the support level, but you can clearly see the shift within the supply and demand dynamics where you didn't see that before. This big supply bar, which is then followed by this big supply bar, all of these candles not taking out the supply bar. These were all very clear signals that this is getting a trend change structure within that smaller time frame, which can always morph into the bigger time frames. So again, right here was the third lower high structure. Now I definitely made a mistake. I was not. But again, by me studying this will really prepare me and get me to be better. Now let's take a look at why this particular candle dropped the way that it did. So first, we all sorry about that, team. I cannot seem to. It's my first time being back, so my mouth definitely has to get used to talking for about 2 hours. But what I'm trying to say is, we already discussed. The fact that we were getting the big supply bars earlier on. And if we see that and we sense weakness, we should always expect another big supply candle or a few more big supply candles to come in. Now, I do want to show you where can we find trend structure. I want to show you guys an example of all right, so okay, there it was. Um, so now let's talk about how a downtrend begins. So the way that a downtrend begins, or the way that we even trade a downtrend, is first we get the origin, right? The origin is always the first touch. Now, how do I know that I'm going to draw my line there? Here's what you do, okay? You don't do anything when you see the first peak. You don't do nothing. When do you start to actually track a trend line? Once you see another peak and then the peak shows weakness and sells off, that's when you start to track the trend line. So how do you start to track the trend line? Let me remove that line, or let me go to a different chart entirely. And here's how you do it. So you're going to connect the peak of it with this line here. And now what you do is you're going to extend it, even though you can't see that price, right? Even though you can't see what happens before, what you can do is you can click on extend to the right and look at how well that aligns with the movement of the upcoming data points as well. Now, again, you don't have to do that. You can just manage it and change it manually by first connecting these lines. And as this data point forms, you further extend your line to see if they break out or if they reject. So again, if I extend that all the way, and then I go back to my studies on how to track trend lines, let's take a look. So first we got the origin, right? That's the first touch. I connect that with the second data point, the second touch, and now this gives me a trend line that I can extend down all the way so that I can predict or I can see where the future touches are going to be. So now I go back to I go back to here. So this was the second touch. We see a sell-off, and now we come up for a third touch. Look what happens at the third touches. The third touches is where you trade off of the trend line. So the third touch and the fourth touch is where you trade off of the trend line. Now, if we actually go back to today's movement, you can see why this reaction was the way that it is and why this reaction was also the way that it is. You guys see that? This is today's price action on the S&P 500 on the 5-minute time frame. Now, team, someone that I know that's super amazing. is Rainbond. When it comes to trend lines, she is so amazing. Like she will draw you symmetricals on the 5 minute time frame, and with a good probability, know where it can break out. So um, definitely utilize these trend lines if you got a good understanding of this. Just this slide, just wait until we cover the other ones. Oh my gosh, you're going to become such an amazing trader. So again, the fourth touch as well, it's also trade off of the trend line, and you can see the reaction of that as well. So this is how trends begin. So if this was on the daily chart, this would go on for a long time. All right, team. So now that we talked about trend structures a little bit, let's go back to the supply and demand dynamics. So again, what is happening here, team? What is actually happening here? What we are seeing here is, let's go back to there we go. So what's essentially happening is we are seeing lower highs, lower lows, lower highs, and then sorry, yeah, lower lows, lower highs, lower lows, lower highs, lower lows, and that's pretty much what was going on the S&P 500. So here we saw a peak and then a lower high structure there, and then a lower low, and then another lower high, and then another lower low, another lower high, another lower low. So you guys see how that led to more and more and more selling. Although this is on a very small time frame on the 5 minute, this can happen on the monthlies. This can happen on the weekly time frame, and it can go on and on and on until eventually you get a breakout above the trend, and that puts an end to a downtrend. So when we go back to AMD, we can see why we call that putting an end to the downtrend, because we're no longer in that downtrend where price continued to reject, and now we're entering an uptrend because we're above the 20 EMA line. All right. So again, this is simply now let's take a look at this in the sense of AMD. So what's exactly happening with AMD? Here's what we were doing. We had the lower high, and then sorry, we had the lower low, and then the lower high, and then another lower low, and then another lower high, and then another lower low, and then a consolidation, and then followed by another low, another consolidation, another low, and then a lower high retesting the prior resistance, and then another low. And finally, what are we seeing here? This is when things got interesting. Instead of us, instead of us going for another lower low, what we ended up doing is we created a potential higher low structure. So what did we exactly do? This is what we did. We created a higher low structure. So why is a higher low so important? This is because a higher low is a bullish characteristic found only in uptrending markets. So this is why this particular higher low structure there is so important. So now that we see a higher low structure and we get above the 20 EMA line, you can see that there's a lot of bulls that are already anticipating that higher high to come in. And what will end up happening is, so technically, what is that higher high above? That higher high is going to be above that particular high right there. So this was a high, and this is going to be a higher high. Once that's a higher high, what will happen is we will either consolidate or we will place another low, a higher low. So another one of these structures here, another higher low, and then we would go for another big higher high structure that'll send us towards, let's say, 187 area. So this is how the trend can change. Thank you for the alert on AMD. It was a quick 15-minute, $450 today. Amazing. That is so awesome to hear. Thank you for sharing that. That's really awesome to hear. So yeah, team, we will cover all of these dynamics. Okay. For now, let's go back to supply and demand so that you guys can really get a good understanding of what my core strategy is. And it all starts off with the basis of supply and demand. So again, these are the four cycles to recognize. Now, I challenge all of you, especially if you're new to the market, I challenge you to basically sign into the website and read this material and make sure that you understand what the two phases of the market movement is and what the four cycles are to recognize that take place inside of those two phases over and over and over. So again, demand is an accumulation zone where a lot of buyers want to buy an asset price for cheap, expecting price action to advance higher. Supply is a distribution zone where a lot of sellers want to sell out of their position and secure profits in expectation of price entering a decline cycle. Now, I do want to change that and say that they either want to get out of their positions because they expect further weakness, um, or simply secure profits if it's at the top. So again, prices move up and down in swing highs and swing lows. The swing lows are where demand occurs and attracts buying, while the swing highs attract sellers, creating a supply zone. So again, team, the two phases that we talked about in this page right here, those two phases, let's talk about those two phases in a more in depth. So the two phases are balance and imbalance. Again, those two terminologies are very easy. We got balance and imbalance. So just from what you can tell from the terminology, balance means that price action is in a defined range from support to resistance. Price action is in a consolidation or choppy, or you can say inside of a base where it goes from support to resistance. Okay. Again, those terminologies describe price action to be flat and limited in an up and down range from support to resistance as price action digests the prior large move. So anytime that you see a consolidation, you look at what the prior move was. So here's what I mean. You look at what the prior phase was. So if you are in a consolidation, you're going to look at what the prior phase was, because that can also give you a great understanding of what's going on. And that's why looking at the prior data is important. So what is price imbalance? Now, price imbalance defines an imbalance between supply and demand, forcing the trend to make a directional move. So this is when this is when either demand overwhelms supply or supply overwhelms demand. The two phases make up the cycles of market trend, shifting from flat market conditions to major directional moves. In supply and demand strategies, we're going to study these areas of balance and imbalance to find high probability and high quality trades. So again, it's really important to keep in mind that balanced markets happen anytime prices are in a limited range. And what's happening is a lot of times this phase is happening just before a major economic event, policy announcement, Fed meeting, and other big events such as the consumer price index or the PPI. So price before such data is released are analyzed by major market participants, and before leading to an event, prices are in a balanced state and prepared to trigger a major imbalance move based on the release of the data. So as we saw from the FOMC event, if we go back to the S&P 500, let's go back and turn on extended hours trading. So I'm going to go ahead and turn on extended hours trading. And this is what happened when we got the CPI data. You can see price action went from 523 all the way to 526 and triggered that major imbalance move to the upside. So the market was consolidating for a long while for that to happen. So if we go to the hourly time frame, we can see that the market was consolidating for about, I would say, even all the way here. So from pretty much from Thursday all the way to Wednesday, price action was consolidating for that data to come out. So during that time, you will see that prices will be consolidating and in a limited range from support to resistance. And just as the data is released, you will get a major move in either direction depending on the data. Now, I do want to emphasize, I was emphasizing to my team today that actually earlier this week, that we can, if we know what trend the market's in, if we know that the market is in an uptrend and demand continues to overwhelm supply, um, we can have a bias every time we go into these big events that the market is going to use the liquidity to further push the markets higher. All right, so again, the price balance in a balanced market, we can expect price action to be flat and limited inside of a range as it digests the prior large move, also known as market balance. So you can see during this time, this is what a the price balance looks like. And again, if we go to let's say, let me turn off the extended hours because that's what I'm comfortable with. If we go to, let's say right here, we can see during this time we have a rally, right? And then during this time, price action consolidates and consolidates and consolidates on the hourly time frame where each candle represents 1 hour. And just as we break the resistance, this is where we trigger the next rally higher. So if we look at here, we can see consolidation and then rally. Once we get that breakout, so this can be on the weekly time frame. Again, this candle can be 1 week, 2 week, 3 week, and then on the fourth week we finally see a breakout, and then the fifth week confirms that breakout with a big follow through that pretty much starts off or kicks off the pretty much the continuation of the uptrend, as we can see from here. And again, for pricing balance, it's the same thing. As soon as we see that breakout from either side, it can be from support or it can be from resistance. Once we see a break from either side, this signifies the imbalance move, and this will send prices lower. Now, if we are in a downtrending market team and we see that breakdown below that support level there, then we would want to take advantage of that downside move with a put trade. All right. So again, if you haven't studied these, you can study them directly in the website, on our website. These are all under supply and demand zones. So first, you're going to go to the price action course, watch the first 5 classes, which give you an introduction into how I incorporate all of that information into my trading, into the mentorship, and into the Discord alerts and all of that stuff. So make sure you catch up with all of these slides here. You can read them, and you can really go in depth to see how these zones are formed and what price does just before the breakouts, um, how to trade supply and demand zones. And now these are the smart money concepts, which we talk about all the time. Now the smart money concepts are one of my favorite strategies. So this is when you will have. So let's take a look at a smart money concept. Um, I do have them on my other charts. Let's see if I can. All right. So let's go to the bigger time frames here. This is a smart money concept here. And why is that a smart money concept? Because we have a rally, we have a base, and then we have a rally happening. So what happens is, once we get that rally, and then price action sells off back down. So this is where we had. Now I think it would be better if I start off the charts clean. I'm gonna go ahead and remove all this information. So this is a cluster of a zone there, right? This is a cluster of a zone, and what you do is you're going to extend that zone. You're going to extend that zone, and as soon as price action shows that there is overwhelming demand, then you're going to use that as a buy opportunity to open a long trade. So again, here's how it works. You have a rally, you have a base formation, and then another rally. And from there, you're going to see price action selling off back down to come back to where the demand zone is, where we broke out in the prior zone. And that is going to be your buy entry as soon as you see a massive demand candle reversal at the retest of the zone. So we can see in terms of SPY, there are several candles right here. Now, there are more zones you can look into. There was another one that we traded a couple of months ago that, where was it? Where was it? We traded, okay, there it is. So this is one of my favorites because I traded that with such a confidence, you guys. This is another smart money concept. We had now turned into, the market had not now turned into an uptrending market. So while everyone was bearish, screaming for a lower low, thinking that the market was going to go for a lower low, break 376 and so forth, because we had seen how the market had been forming this higher low, higher high, another higher low, and then equal lows, equal highs, and then higher high, higher lows, higher high. And then we finally see a massive correction because we're away from the 200 SMA line. Once we come back down to the smart money concept, this is where, because of the cluster of demand that was there, where the breakout took place, this is where we expect buyers to show up. So there is proof. If you go to the Discord, um, there is proof in the market analysis that that shows that I have used this information for our team to navigate the markets and get some amazing trades in. So let me just go ahead. I mean, my gosh, look at all this analysis we used to do, you guys. But if we look at the S&P 500, I remember those times. This is when I really I was very active, you guys, and I still am. I mean, if you look at this particular zone here, this is just before SPY broke out on the weekly time frame, and you can see I even put supply, demand, and why we would break out. So if I go to that particular time frame here, this is when this happened, and this is all based on the understanding of supply and demand dynamics. So what you are seeing right there is this move right here. This is the weekly candle on the same charts there for the S&P 500. So this is just that zone before we saw that massive breakout that took the S&P 500 from 410 all the way to 457 on the breakout. So again, this particular resistance that we are looking at is that zone. So the fact that we were building that zone there, we knew that this was going to be overwhelmed by demand and we would see another continuation of the rally. So yeah, you guys, honestly, amazing information. I hope this encourages you. If you just joined the mentorship, I hope this encourages you to continue to catch up with the classes so that you will be ready heading into the future classes when we resume support and resistance levels. Now, team, what do we do? What do we do with our strategy? What is our core strategy? Our core strategy is to combine. So you guys see how we studied the trend. Our core strategy is to combine the trend and zones to make informed, smart, pretty much smart money decisions, going with the momentum of the market, going with the supply and demand dynamics. So we are using the trend. So what do we mean by that? If the market is in an uptrend, what do? We look for demand zones. Okay, team? If the market is in an uptrend, we look for demand zones. Now, there are many ways we can recognize demand zones. This is also another form of recognizing demand zones. We can see, you guys remember we studied trend lines earlier, right? What did we say? We said the first one is the origin. The second one is the phase where we track the trend line. Remember, you guys? And then the third one is, what was the third one, you guys? The third one was we trade off of the trend line. Now tell me, Exactly. It's confirmation, boss Ken. Yes, sir. Well said. So, team, tell me if you saw this massive demand candle on the weekly chart. Okay, I'm gonna hit you with another question. If we saw this demand candle on the 5 minute time frame, what would we do? Considering that the market is in an uptrend, we would happily buy, right? We would buy a trade there because that's a demand candle. The fact that we see this on the weekly time frame, I I have a early celebration because I know that for the coming months, there's a great chance that I'm going to bank knowing that we have a demand candle, which is a starting entry that can lead to a higher high structure. And that's exactly what we saw. And this happened at a cycle of right here, you guys, buying at the demand zones. So you guys see how that all makes sense with our core strategy. So, team, if you study this, you will become a great trader and give yourself time. Once you combine that with the experience, you're going to have so many aha moments where everything will make sense. So, if we are in an uptrending market and the chart looks like that, what do? We buy at the demand zone, and what is our exit or profit target? We let profits run because we are not expecting price action to reject at resistance. So again, this is the resistance, and we are not expecting price action to reject at resistance. We are expecting price action to basically continue higher because and create another higher high above the prior high because we're in an uptrending market. And trend structure tells us that the market moves in higher lows, higher highs, higher lows, higher highs, and so forth. I read this in a book, but your explanation helps a whole lot. Awesome. I'm so happy to hear that. So, team, if we talked about how the market has two phases, right? We got the flat zone, we got the consolidation phase, and then we got the directional phase. So the directional can be either an uptrend or a downtrend. So this is why we study these two kind of zones. We have a tide zone, what is known as a tide zone, and in a tide zone, price action is going from support to resistance in 1 to 2 to 3 candles, really fast, and that means that there is not a lot of room to enter from support to resistance to trade that. So in a tight zone, what you do is you wait for a breakout from either side. You don't trade the support to resistance. You wait for a breakout from either side, and then you're going to trade it. Once you have a breakout from either side, then you're going to trade it. Now, in a wide zone, what do we do? In a wide zone, it'll take about anywhere from 5 to 15 candles to get from support to resistance and resistance to support. So in this case, we can buy at support and then sell at resistance. So we can buy low, short high, sell high, and cover low. Now let's put those two zones in an example, team, okay? Let's take a look at this particular zone. What is this zone right here, team? Can anyone tell us what is this particular zone here? Is this a wide zone or is this a tight zone? And if so, why?
I say it's a tight zone because it's only like 5, 6 candles.
Yes, sir. Well said. Well said. Boss Ken also said tied because only 1 or 2 candles at the top and bottom. Yes, sir. Well said, you guys. Well said. And this is why this is a tight zone. So what do we do on this tight zone? We don't trade these candles. It's this candle that we trade and this candle that we trade. This is the perfect candle because that tells us that yes, bears had a chance to take it all the way low, but they could not break the major support of those data points that formed those candles. So what they did was bulls did not give the bears a chance to close that candle below. Instead, what they did was they brought the candle above the prior high, the prior week high, and they got that high candle close. And that gives them a clear signal that bulls are indeed in control. And that's what each of these candles represent. The fact that this candle closes far above this candle and closes even above this candle and all of these three candles, it's because they're trying to send out a clear signal that demand is very, very overwhelming. I see Chef Mike is in here. Thank you so much for joining, Chef Mike. I've missed you. I haven't seen you in the chat room in a long while. I know you've been on a break, so awesome to see you in here. Um, Team, now we look at a bigger zone here. So this is a bigger zone. This right here is a bigger zone. Now, what is this zone? And again, you can have a zone within a zone, within a zone, and within a zone. We will talk about that shortly. What is that zone trying to simply digest? So, team, I do want to make this easier on you. Okay, think of it this way. Again, anytime you see a zone formation, it's because the zone is forming to try and digest the prior price, okay, the prior move. So again, what is the prior move? The prior move is this one right here. So you see how we had a rally? We had a rally right at the retest of the 200 SMA line on the weekly chart. Each of these candles describe pretty much are showing 1 week duration from Monday to Friday. Okay. So not at all, Chef Mike. Honest to God, I'm so happy to see you here. So in this case, team, we have a rally, and then we have a base formation. This base formation is trying to digest that rally and trying to basically during this time, this new price is getting accepted by the participants. So during this time, you have sellers exchanging hands with new buyers, and the demand is maintaining high, if that makes sense. So again, once we see a breakout above resistance, that signifies a continuation for another uptrend. So far, does this make sense, you guys? How the market moves? And honest to God, you can just go from there and you're going to become like you really pick this up fast, and you're going to become advanced before you even know it, because time always goes by, and as long as you're keeping that curve up and you're learning every day, you're going to accumulate more and more and more. You're going to compound that information to more and more and more. So again, if we are in an uptrending market, we buy at the demand zones, and if we have a tight zone, I do want to see. Oh, okay. So if you have a tight zone, um, you wait for a breakout and then you trade the breakout. If you have a wide zone, you can trade from support to resistance and resistance to support, and then also trade the breakout of that. And if you are in a downtrending market, you short at the supply zones, okay? So what does it mean to be shorting at the supply zones? Let's take a look at the S&P 500 here. I'm going to go ahead and remove all of this data. So this is the S&P 500. Now, if we go back to when the market was in when the S&P 500 was in a downtrend, take a look at how this happens. So this is a zone, right? This is a zone here. This is a drop. And again, what needs to signify as a drop? You need 3 large red candles. So you need 3 large red candles. And even this green candle counts as a drop because it gapped down. So we have a drop, and then we have, and keep in mind, this should take place under the 200 and the 20 EMA to be a downtrending market. So we have a drop, and then we have a base, and then we have another job happening. So what happens is once we have this job based job, you can see how we come back up, retest that zone again, retest that supply zone, and then have another lower low from there. So again, let's go back to what it means. And this is what it simply means. We short at the supply zones and we let profits run below the low because we're anticipating another lower low to come in. So what is this concept here exactly? Now let's go back to the smart money concept and we can see this is a job. Oops. This is a drop, and then this is a base, and then this is another drop. Now what happens is price action goes back up for a corrective move, retests that supply zone, and then once it retests the supply zone, we see another big sell-off, just like this tells us right here. So again, this can happen depending on what market we are in. We can pretty much anticipate the formulas of supply and demand to behave accordingly. All right, now let's talk about this slide a little bit more. Team, what does it mean for us to combine trend and the zone? Again, it is when we look at what trend the market is in, and depending on if the market is in an uptrend, then we look for demand zones. If the market is in a downtrend, then we look for supply zones. And just like how we explained here, if the market's in a downtrend, our focus is going to be on supply zones because that's where the overwhelming momentum is. That's where the overwhelming trend is. All right, team. So now let's talk about continuation and reversal zones in supply and demand. So again, we have two types of continuation zones. Now there are four types of supply and demand zones, okay? Four types only. Two types are continuation zones, and then two types are reversal zones. Now, don't let that confuse you. Don't let that confuse you. Just take it in this way, okay? Two of the zones are continuation zones. What does that mean? That means one zone, one of them, one characteristic, one of the formulas happens only in uptrending markets, and the other one happens only in downtrending markets. If we're in a downtrending market and you see three big red bars, then you see a consolidation. You should know with high probabilities that there is going to be another drop at the break of that zone. Now we can go take a look at Tesla. Tesla recently has had overwhelming supply, and we can see these zones happening. This was a big zone. This was a drop base, and then another big drop that sent prices from the break of 180 all the way down to the break of 138. So now we are seeing something interesting. We may be seeing a potential trend change where we went from making lower lows, lower highs, lower lows, lower highs, lower lows, to finally creating a higher high above that high. So you see how this was a lower high? This now is broken by that higher high. So what do we then wait for? What we then suspect for is and we will learn this in trend structure. So let's go over the trend structure change, and here we are. So what we are waiting for right now is to see if we are going to see that nice higher low, which is a bullish characteristic only found in uptrending markets. We already have a higher high, and now we are suspecting that higher low. Now, when do I get a confirmation that this higher low has been placed on Tesla so that I can take advantage of this opportunity? The day we break above 182.08, that's when we start to think about the great possibility that we have a higher low placed, and now we are going to go for a higher high at 198, and then we are going to go for the resistance at 198.40, which is the most recent higher high, and then we will break that and create a new higher high at around 215 area. So where was it? At this zone right here. So that would be just at the gap fill around, I would say even 208 all the way to 213, 214. So this is how trend structures happen. Okay, team. And this is what's going on with Tesla. So we'll be watching for that. And we're going to study all of that good stuff. Like, how do we know a downtrend is weakening? How do we know a trend is about to, how do we know the market is about to reverse? All of that good stuff. All right. So let's go back to where were we? All right, now we talk about the two. So now that we have discussed both types of continuation zones, so again, it's very simple. Please don't complicate them, okay? Keep these two separate from these two, okay? The two reversal zones. And if you keep it separate like that, it's going to be very easy, and you'll distinguish between the four zones. Um, so for these two continuation zones, this one happens when the market is already in an uptrend, and this happens when the market is already in a downtrend, and it will happen over and over and over and over with the stock dropping until eventually there is a bottoming process or a topping process, as we explained in market structure. So now let's talk about the two types of reversal zones. So the two types of reversal zones. Now this zone right here, the demand zone, this can happen, this can be expected, of course, in accumulation zones, as we discussed, and it can happen when the market is bullish, okay? So how does this happen when the market is bullish? Let's take a look at how that happens. So I'm going to go ahead and let's remove all of these charts here. Okay. So let's find, okay, so I think this might be a good one, but at the same time, I want to get one where we are in a clear uptrend. Um, Now this one can be it. This whole cluster of zones can be it. But let's find some better ones. Now, team, look, you know how I said, so the before we we'll find one of this one, but let's talk about the supply zone. You know how I said this can be found in demand zones where where pretty much we here's how it happens. We get a big job because maybe we had some news, or maybe because we were greatly overbought, and what ends up happening is we create a zone at somewhere like where the smart money concept was. So this zone could be extended to the prior breakout of the demand resistance, where this turns into support and then advances back up. So this is where these zones can be expected. Now a supply zone like that, where we get a rally and then we get a base and then a drop, this can be expected when we are in a downtrending market. Now, in downtrending markets, you can get very violent rallies, okay? They're called relief rallies. So this right here is a good relief rally here, and we can see that the market the whole time was in a downtrend. So how do we know the market was in a downtrend? We're below the 200 SMA line, and we have been rejecting this trend line over and over and over. For the third test, we triggered a major lower low. So now what do we have here? We have a rally, and then we have a base, and finally this zone breaks down and now has a drop. So we have a rally, base, and then a drop, and this drop now sends us far lower than where the prior low was. So this is what I mean by you will find this supply zone in an uptrending market. You will see a relief rally, but then the problem is the zone is not going to sustain. So that's what traders mean when they say that price is not able to sustain. They mean that it's not able to consolidate and digest that zone. All right, so now that we have discussed those two zones, let's go ahead and talk about both of those zones. All of those formulas and those two different type of zones in more depth. So um, Continuation zones are simply rest stations before the next destination zone. Again, they are rest stations before the next destination zone. Okay. Continuation zones always appear after an already uptrend structure in place and will continue in the same direction. Sorry, not an uptrend, an already trend structure in place. So whether it be a downtrend or an uptrend, this means that the trend is already established and that if you're in a downtrend, then you know that the continuation happens the moment bears break 1 penny below support level. Once they break below support level, this means that sellers are overwhelming demand at a level of support, which then means that there will be another drop from price action. So reversal zones signify weakness in supply and demand zones as price is unsuccessful to proceed in the direction of its prior move. So a reversal zone is formed when a continuation pattern has failed to continue in the same direction. The 180-degree turn in price action signify trend change in the opposite direction. So does that make sense? This means that you could have it in a downtrend, or you could have it in, let's say, let's put it into example. So um, in a downtrending market in particular, it can be something like that. So yeah, the trend is in a downtrend on the much bigger or in the current times, but in the far bigger picture, it's a rally based rally. It's a smart money concept at that zone. So this zone, we can anticipate, because we have a lower low already and everything, we can anticipate this is this type of zone right here. It's a reversal zone because it signifies weakness in supply and demand zones as price is unsuccessful to proceed in the direction of its prior move. What does it mean? This means that because this was a drop and now this is a base, it was not able to proceed with another drop in the prior direction. So instead, we get a reversal, and that pretty much signifies accumulation. Now let's take a look at another example where we will see this in an uptrend as well. Now, I shouldn't have showed you guys this example because this could have been confusing. But those of you that have been part of our price action, part of our mentorship, I'm sure this gave you a great spark on how to use that in the future, because that's very true, you guys. You really can do that. You can pretty much you can look at a far bigger trend, and you can recognize where the cluster of the supply and demand dynamics are going to be. So again, you can see by connecting these three lines, I can extend the downtrend without me even doing anything. I can just extend it to the right, and you can see how it connects all those data points. But of course, like I said, I always like to do it manually because I love to adjust my data points, because if I adjust it, you see how I made it much, much better by connecting all of the lines there. Just so much better now. So let's go ahead and look at a price that's not Tesla, which has been in a downtrend for the last 3 years. Let's take a look at a stock that's been in an uptrend, so we can talk about that that zone where. Okay, so here's a good one, team. Okay. I'm going to go ahead and remove all of this stuff here. So this is a good zone. You know how we talked about seeing a drop and then a base formation and then a rally back up? You can find this in an uptrend from pretty much failed continuations. So you see how this is a drop and then this is a base. It's supposed to get another drop, right? But no, it doesn't. Why? Because we're in an uptrending market. You know what I mean, you guys? We're in an uptrending market, so we shouldn't be expecting that. And we're above the 200 SMA line. Well said, Chef Mike. Well said. So this is why that zone is a reversal. Okay, team, this is how you find use of these zones, and you distinguish between which ones happen in which. So this is a bullish characteristic. We can see drop, base, and then once you see the zone, and you will know that some zones will be able to reverse because we're in an uptrending market, and the market itself will show you. Like you can see, by connecting these data points here, we can see this was the resistance, and this candle was a massive, massive demand that countered that supply. So after it countered that supply, what did it do? Check this out, team. You can legit draw this yourself, and you can catch these amazing opportunities. Again, now we have a rally, and then we have a base, and then we have another rally. So you can see, and this consolidation happens well above the 20 EMA line. So as soon as you get that candle right there, that's your entry confirmation that we are going for an expansion. And then again, we have a bigger zone here. This is another bigger zone. And yeah, and this will continue until eventually price action tires out, exhausts, and then we will see a topping process. So right now, I'm going to go ahead and draw that resistance on Microsoft, and we're going to see if bulls are going to break that resistance. Once they break that resistance, then we are going to go long on Microsoft. So always, once you see or once you have traded some zones, always adjust your zones by, let's say, removing everything or removing the data points. Honestly, if you really want my opinion, always remove, once we have moved on, remove your charts and everything, so that you can start off fresh and create something like that. So now check this out, you guys. Guess who now sees a very, very clear defined range on Microsoft stock? You guys see that? Now we have a very, very clear level of support and resistance on Microsoft. You guys see that? And we did that by removing all of the extra zones on the smaller time frames, and now combining that with a much bigger zone. So we have that rally, we have that base formation, and as soon as price action cools off and then comes back to resistance, breaking this level, guess what, team? We will be expecting an expansion on Microsoft. So that's what I mean by always removing the old data, so that you can create another zone that will give you a much better understanding of price movement as we continue to form more data. All right, let's see what we have covered so far. So again, this is the continuation zones. Like we said, they're simply rest stations before the next destination zone. So in an uptrending market, we will see price action follow rally base rally, known as RBR as initials, as shown in the illustration, rally base rally. So this is a continuation pattern found only in uptrending markets when demand continues to exceed supply. And in a downtrend, vice versa, price action is in a bearish structure and formulates a drop, and then a base, and then is followed by another drop as soon as we break support. And this is a continuation pattern for downtrends when supply continues to topple demand. And that's about it, team. That concludes our session for the day. I'm going to pause here. Hopefully, you guys got a great understanding of supply and demand. Hopefully, you guys got a good understanding of my strategy, my core strategy on what I combine using my price action data points, and with all of the arsenal of price action strategies that I've learned over the years. Are there any questions so far, team?
Yeah, I was gonna ask, can I get this recording or something like that? Because there was a lot that you went over, and I don't think I'm gonna remember it all.
Yes, sir. Yes, sir. I'll share this recording in the library of our Discord.
Okay, all right. Thank you.
Yes, sir. And thank you for attending. Really opened my eyes into the market cycles. I'm so happy to hear that, Juan. This has been great. Can you send us the recording? Yes, I can, Dr. C. I'm going to post the recording in the library of our Discord. Boss Ken, thank you. Thank you so much for attending. Thank you guys so much for attending. I hope I gave you guys some sparks to grow your understanding from there. Honest to God, I know that I was all over the place, and because I haven't done the mentorship classes in a long while, I really I really cannot wait for the future classes as I get my groove back and explain these much better. In the meantime, I strongly urge you, if you are new to the mentorship, we have had so many new students. And if you're one of those, I strongly encourage you to go ahead and study those classes in the mentor in on our website. So let me see if I can actually sign in so I can show you guys. I think my screen just froze. That's odd. My screen just froze, you guys. I'm not sure if my looks like we're still on here, but okay, there we go. I fixed it. All right. Um, so what were we looking at? What were we looking at? Okay, we're going to sign in on the mentorship so that we can show you guys um, how to sign in and which classes to look at and how I can encourage you guys to go through. Now, mine is going to look different from you because I'm an admin, okay? Um, Mine looks much different from you. Yours won't have any of that complicated stuff. You can click on start learning. And when you click on start learning, you're going to see, before you click on start learning, actually, you're going to see these courses. You have the price action trading course. This is where the mentorship materials are. And then you're going to see an options trading course. We do have, I believe, a few classes on options trading. So you go to view recordings, and so far we have introduction into options trading and then session one. You can study those classes in the meantime until we host more classes. And we also have the 2K to 25K cash account classes. And now this one you need to watch right here. This, you guys, Alan, thank you so much for being here. Thank you, sir. Um, Team, this class right here is very good. Okay, this the 200 SMA and the 20 EMA super trading strategy. Now, what this teaches you, it teaches you about the 200 SMA line and the 20 EMA line using our core supply and demand strategies. So you guys study that, and you can watch it. You can watch it, like you can click on it and view recordings, and let's say you can click on this one, and what you can do is, instead of watching it on the normal speed, if you like, you can put it to 1.25x speed, and that will cut some of the times where I will say or I will take my time explaining. This way, I think you will get a very, very smooth understanding without all of the pause. Because the way that I feel is like when I watch others and learn, the 1.25x really makes things better for me because it cuts out the bias that I would have for a person. So then everything turns informational for me. I don't know if I'm making sense on that, but you guys give it a try on 1.25x speed and let me know how that goes. Now, if you're a slow learner, then I suggest you watch it on the normal, and that's perfectly fine. But do check out, please do watch those recordings. Now let's go back to the mentorship. Start off with the price action, basically guide to price action, which is the basically explains what we do, how we use this information, how it applies to longer term investing, the pretty much the psychology, all of that good stuff. Okay. And then once you're done watching that, you come to identifying and drawing identifying, drawing, and trading the supply and demand zones. You're going to watch these 5 sessions here on supply and demand zones, and then you go to the additional training on supply and demand zones. You watch this session here. And once you're done watching that, you go to introduction to support and resistance. You catch up to these 5 sessions here, and then you have caught up to where we are at. And now you'll be ready to cover additional trainings on support and resistance, heading into the upcoming classes we'll be covering. So heading into the upcoming classes, these are the materials that we will cover. Let's go to support and resistance. This is where we are at. So we will be covering more of these materials of support and resistance. And then this is where the great part comes in. We go into introduction to market structure, where we study trends and all that good stuff, the higher lows, higher highs, and all that good stuff. The trend behavior, the type of trend behaviors, and the all the good stuff, you guys, all of the good stuff, how to trade them, all of that good stuff, how the trend lines form, the origins, and all the good stuff, you guys. Um, Cool Elephant learned a lot on the zones and continuation. We'll have to go over and over so I can memorize them. Yes, sir. Sounds amazing. And as you put that into work, as you practice that, and what I want you guys to do is, whenever you have time, I want you guys to look at all the charts, everything that you can come across, and I want you guys to basically draw those zones. Okay, draw those zones and see how price action reacts to breaking out of those zones. Now, even if they don't really add up well, just practice it and see where that gets you. Okay, continue to practice them. That's all for me for tonight, team. I hope you have a wonderful, wonderful night. Thank you all so much for attending tonight's session. And I'm looking forward to this weekend, you guys. I'll try to host another class on my pretty much my strategies and my psychology on price action, based on what I go through. What I go through the weeks, and or what I notice from our team, so that I can continue to add good stuff to our team. So I'll try to make myself useful this weekend. But I'm really looking forward to next week's mentorship classes. Um, and yeah, you guys, thank you so much for attending. That's all for me. Take care.